All right, welcome back, traders. John Caruso here, coming to you on Friday, August 18th. We're going to do a quick recap of some of the action that we've seen here this week and hopefully get you guys off on the right foot going into Sunday evening's open and, of course, Monday's trade. So first off, we do have the S&P 500 up here. I do have a Fibonacci on the charts, as clearly we do have kind of this anchor point up here. We saw that swift rejection in the S&P that came in right around the end of July 727. The market did try to retest up in here and then, of course, ultimately failed, consolidated for a few days around the 4,500 level, and then ultimately failed again. We have just recently seen approximate 6 to 7% correction in the S&P 500. I did have a signaling immediate term oversold as of yesterday and this morning. We have since come off the oversold signal. Right now, we are actually right about unchanged to trying to go positive here on the day on Friday. However, this is certainly going to be an ugly close to the week for the stock market. Now, we are trying to hold this 23.6% Fibonacci level. I, for one, actually believe, let me get my drawing tool up here, that there will be an attempt over the next 1 to 2 weeks at a rally in the S&P 500 that could maybe stretch us as high as 44.65, potentially another retest of 44.90 to 4,500. But ultimately, based on the severity of this decline that we've seen, in how weak we've seen mega cap tech stocks, I ultimately do believe this will fail again and potentially stretch as low as the 38.2% fib number, which comes in down around 4205. That would represent a 10% correction in the S&P 500. So if we do see some attempts at a rally, I do ultimately expect them to fail, stop, reverse, reject, and move back down, potentially as deep as 4205 in the S&P 500. We're going to wait and see to see how things kind of develop. We are in a seasonally weak period for the market. We did warn our traders back in July that August, we did actually suspect that we were seeing a bottoming process take place in the VIX contract, the volatility index, and that was certainly going to lead to some lower stock prices. And that's certainly what we have seen thus far, August 1st to date. So that's a look at the S&P 500. Still will give it a chance at 4,200 on a 10% correction to give us another rally potentially that could stretch into the end of the year. So still a little bit too early to be shopping for a hard bottom in this market. We think any attempts at a rally ultimately fail, and perhaps there's going to be a better buying opportunity that presents itself out into October. So that is a look at the S&P 500. We're going to flip over. We're going to take a look at let's look at the dollar market right now because we've seen a lot of strength in the U.S. dollar here as of late. We are struggling in the dollar clearly off of this 200-day moving average. The market is actually down about 21 points here today. We have not seen weakness in the U.S. dollar this entire move up. And clearly this consolidation weakness around the 200, it might kick us down for a few days, which would coincide with an attempted rally in the stock market. But ultimately, I do think that we will once again reattempt to try to attack current levels right around 103.60 up into about 104 in the U.S. dollar. However, taking a longer term view of the dollar, looking at the weekly chart, this is still a very weak setup that we're seeing here. Clearly, we've seen this series of lower lows in the market. We saw we saw the puke out back in, it looks like it was back in, let me take a look here. This is going back a ways here. This is back in June. We saw this retest of the $100 mark. The attempted rally that, of course, failed, saw another lower low. It was a very modest lower low, another attempt, and we saw another lower high. And, of course, we saw that recent failure down to about 99.50. Now we've seen about 1, 2, 3, 4, 5, 6 straight weeks of this market attempting to rally, I still have negative momentum on the weekly. So, negative momentum on the weekly still is telling me that this market is likely going. This is likely going to fail once again at a lower high and eventually start to work its way back down to potentially taking out this low down here at 99.50 going out into the end of the year. But right now, over the very, very near term, pulling up the daily, we do of course have this very strong tape that's ensued in this market, and it's going to take some time to kind of burn that off before we ultimately see this market fail once again. That's a look at the U.S. dollar. Flipping over to the gold market here, because of course gold has been trading lower this entire time that the U.S. dollar has been working its way higher. Very weak tape in here. Ultimately, if I look at the weekly, this is still a positively configured chart. Now, of course, we've been down for the last 3 consecutive weeks. Going back to the daily chart, very weak tape right now. We might have to see this market really kind of puke. That gives you a much and make a harder bottom before it can sweat off the downward forces that are on this chart. So if this market were to dump down along 1900 to potentially as deep as we're going to say 1873. So I'm going to say 1873 to 1900 is the zone where I believe that gold will make a low and ultimately attempt rallies on the upside, and potentially setting up for a much more stronger picture going out into the end of the year on weaker U.S. dollar and potentially out into next year. But right now, of course, the interest rate market's rising here over the last couple of weeks. The dollar rising. That has been a very big negative for the gold market, and gold is certainly having trouble finding its footing and falling out of favor with immediate term traders. I am longer term. I do believe that gold is still going to be an outstanding place to be on the long side going out into the end of the year and into next year. But right now, gold clearly falling out of favor. Lastly, we're going to take a look at crude oil. Crude oil's been on everyone's mind here. So taking a look at oil, of course, we have seen the market come off alongside the stock market. We are starting to find an attempted rally in here, which also leads me to believe that stocks over the next few days may make an attempt at a rally. But ultimately, this market with crude, if we do rally potentially into 82.50, I do think we're going to eventually struggle up in here and make another break on the downside that could happen out into late. It looks like September, the way that we have it on here. And then ultimately, I think it will consolidate, find some footing, and move higher out into the end of the year. But right now, crude oil, this decline right here doesn't look like it's fully complete. We will have an attempt at alongside trading here before ultimately another failure, we believe, out into September. However, taking a look at the bigger picture for oil, we did take out, clearly you can see this big U-shaped pattern that we've gotten here. I believe all of this in here is a massive bottoming phase for energy prices. And right now, crude oil in this longer term bottoming phase, we did, of course, take out that 83.50 level. This did flip the chart bullish, in our opinion. However, now we're starting to see the bearish trade begin to set in. But this is a longer term bullish pattern in crude, which leads me to believe if we were to fall back along 76 to potentially as deep as the 61.8, which would be 73.89 in oil, I think that's going to be an outstanding long side opportunity or entry point for crude oil, potentially for several months, potentially several years to come in crude oil. So still very bullish in crude oil on a long enough timeline, but right now might have an immediate term attempt at a rally of failure back into 76 to potentially 73 before a much better buying opportunity going out into the end of the year and well out into next year. So that is a look at 4 markets for you guys. I hopefully that was helpful for you guys. If you guys have any questions, if you want to ping me anything at all, please feel free to do so. Jay Caruso at rgofutures.com. Everybody have a fantastic weekend. We'll catch you back here next week. Take care.